Credit scores are everything when it comes to mortgage financing. And for the typical consumer, credit score models, how they work, they're just confusing. Even for seasoned professionals. I've been looking at credit now since 1995. Yeah, 30 years. Thousands of credit reports later. I have a pretty good idea of how it all works, but they don't have an exact chart of, well, this is worth 10 points and this is worth 20. And if you do this, this is worth 50 points when it comes to credit. And credit scores here in the US for the typical renter, the average is 638. I just did a Google search on this today. And for homeowners, the average score is 715. It's a big difference between the two. And scores are used for so many parts of the mortgage financing process. The rate that you pay and the cost of that rate, and private mortgage insurance expense if you have less than 20% down, conventional financing. And in some states, there's a form of credit score used to determine what you'll pay for your homeowner's insurance. So those three items will affect your total monthly payment and your cash to close when it comes to down payment and settlement expenses. Credit scores are also used to determine the minimum required for financing programs. Government financing, so that's VA, FHA, USDA, typically needs 580 or better. Conventional financing, Fannie Mae, Freddie Mac, typically needs 620 or better. Non-QM, non-qualified mortgage, that's bank statement type loans and investor cash flow or DSCR, typically 660 or better. For down payment assistance programs, here in Maryland, the Maryland Mortgage Program, you need a 640 or better. But automated underwriting also uses credit scores to determine your maximum debt ratio and whether or not you need payment reserves. So with higher credit scores, you might see a higher debt ratio approved. So you have a higher housing budget. Or with lower credit scores, you may need to show you have additional payment reserves in your bank account over and above what you need for your cash to close, your down payment and settlement cost. The good news is that we have a new tool at our disposal. It was just released at the end of December by CreditXpert, a new optimization tool for credit scores. This replaces the Wayfinder and the What If Simulator. And those are tools we had access to for a long time, where we could go in and see what could be done to improve scores. But there were so many ways to go about it. I don't think I ever realized just how many different scenarios there were to credit scores. But I now know because I've had the opportunity to use this new optimization tool. And it can literally run hundreds of simulations in less than 1 second and come up with a plan to improve score in the next 30 days. In fact, by CreditXpert's estimate, 73% of applicants could see score increases of 20 points or more in the next 30 days. And 1 point can be all the difference. A 679 versus a 680, a 740 versus a 739. You will see differences in cost for your interest rate and also your PMI expense with conventional financing, for example. So they can do this because CreditXpert's been around since 2001. And over that time, so 24 years now, they have reviewed over 750 million credit reports. Last year alone, through CreditXpert, over 900,000 people were able to improve their score. Over the last 5 years, nearly 4 million people. So I think it's safe to say they are the experts when it comes to credit scores. If you have questions or if you want to see what this could do for your credit scores, you're thinking about buying a home or refinancing at some point, you can connect with me via Linktree. And if you want to learn more when it comes to credit, financing, or real estate, please be sure to like, follow, or subscribe.